I want to head out to Brian Cheung, who is in D.C. for us. Brian, break down the decision for us.
Yeah, so just got out of the FOMC lockup. The big headlines from the statement today is that they cut interest rates by 25 basis points. That now takes the target range down to 2 to 2.25%. Also notable that they did have a little bit more range in terms of delivering a dovish tone because of what they did with the balance sheet normalization process. If you recall, they originally planned on stopping the unwind of assets on its balance sheet, again, kind of colloquially referred to as quantitative tightening. At the end of September, the Fed opted to actually end that program early by 2 months, which means that effective tomorrow on Thursday, they will actually keep the level of asset holdings the same. Again, this is kind of the process of quantitative tightening that it had embarked on beginning in 2017. It is now going to end that process tomorrow, but is worth noting still that they plan on instructing the New York Fed, which kind of manages this process, to kind of clean out its debt and agency mortgage-backed security holdings to what will be kind of more plain vanilla treasuries, even though it's going to hold the asset levels the same. They hope that'll lead to a more neutralized balance sheet. But again, they did keep they are going to keep the levels the same starting tomorrow. So again, 25 basis point cut. As far as the economic outlook, it seemed like a lot of the language was the same as actually what they used in the June meeting. They described business fixed investment as soft. That was language that they had recycled from the June 19 meeting. They said that inflation pressures remain muted. So not too much new language. I mean, this kind of points to the fact that they hadn't seen any sort of kind of upward bias in the data received since June. They did say, however, that the labor market continues to be solid given the strong June jobs report that we got a few weeks ago. So interesting to see what the commentary is going to be from Chairman Powell in about 30 minutes on regards to why they ended up going with a 25 basis point cut here today. But again, the big headline is 25 basis point cut, and they did stop the balance sheet normalization process 2 months early.
Hey, Brian, it's Adam, and I know you talked to officials at the Fed. I'm curious, I want to get into what this really means that they stopped the quantitative tightening early. It sounds at, the headline, okay, big deal, but it is a big deal because doesn't it allow them wiggle room to cut rates in the future without having to do the big 50 basis point today that some thought might be coming? And is it sending a signal that maybe all is not great with the economy? How should we interpret this?
Well, the big story here is that by ending the balance sheet normalization process 2 months early, they hope to make sure that they can kind of sync the balance sheet process with what they're doing with rates. For the longest time, over the past 2 years or so, it had been kind of logically okay to have a balance sheet that was shrinking because it was going to tighten financial conditions, because they were also raising rates at the same time. But the optics of cutting rates at the same time while allowing the balance sheet to continue to run off was probably a consideration that the Federal Reserve was worried about. Again, hoping to get more color from Chairman Powell in the meeting today. But the fact that they tried to keep this in sync at the same go had been discussed since the June 19 meeting. Powell being asked about it in that press conference and saying, yes, we're planning on ending the balance sheet at the end of September, but that we will be flexible with that plan. So leaving that on the table. And as we've seen from the statement released 5 minutes ago, they are following through on that. And in terms of the way that it works with the rate cuts, I mean, this is not a meeting where we've gotten dot plot projections. We don't know where the Fed is telegraphing or wants to go in future meetings throughout the end of this year. But keep in mind that there is a multiplicity of ideas on this current Fed committee. We actually saw 2 dissents under this decision. This is the second and third dissent since Chairman Powell has taken on the Fed. Came from Eric Rosengren from the Boston Fed and also Esther George from Kansas City. So interesting to see that they had actually preferred to keep rates at current levels, or rather at previous levels before today. So some different ideas on the committee there.
Okay, Brian Cheung, thank you for that.